Hello and welcome to Insurance Explained. I'm your host, Andy Hodges. This podcast is brought to you by the Insurance Institute of Zimbabwe, IIZ. How complicated do you find insurance? Do you actually understand the policies that are tried to be sold to you or are sold to you by insurance agents? Do you believe that insurance agents in the insurance sector is professional? Do they have a standard code of conduct? Are they professional? These are questions that we're going to try and unpack today here on Insurance Explained. This podcast, of course, which will be bringing you all the nitty-gritties about insurance and how you should understand insurance, because insurance is critical, not just for you as an individual, but also for your business and your family. This is Insurance Explained. Join us after the break. Welcome back to Insurance Explained. I'm your host, Andy Hodges. I'm now joined by Dr. Lovemore Gomera. He's the Chief Executive Officer of CGI. Lovemore, welcome to Insurance Explained. It's a pleasure having you.
Thanks, Andy.
Now, the reason why I have you here, to be honest, is you have such a wealth of experience, 33 years in the insurance sector. If I recall from your profile, you used to be the CEO of Metropolitan Life in Zambia, for example. So you worked in South Africa, Zambia, East Africa, Zimbabwe, of course. So you have a very deep knowledge of the sector. And now you actually are the CEO of CGI. Maybe just give me a little bit of explanation of CGI, the corporate governance side of it, how it links into insurance, just to explain to our viewers.
Yeah. So, yes, you're right, Andy. I've been in the market for the past 33 years before I went into academia. First with Zimnat, Eagle Insurance, Marsh. I ran Alexander Forbes Risk Services as Chief Executive. Then I was headhunted into South Africa by MMI Holdings. And yes, I went into East Africa as country head and chief executive officer based in Tanzania. And then I came into Zambia. And then I was back to Zimbabwe. Now, in my current role, I'm the chief executive officer and secretary of the Chartered Governance and Accountants Institute in Zimbabwe. I have left the insurance market. I'm now in the governance space. I professionalize accountants and governance professionals, the chartered secretaries and all, but we still interact quite a lot with the market. I sit on different insurance boards and I still consult as a consultant. In my previous role in the market, in the insurance market, I also was the president of the Insurance Institute in Zimbabwe. I was also an ambassador of the International Insurance Society, and I held quite a number of positions as chairman of the Brokers Association and so on. So I have got a fair view of what happens in the market.
I think you've got a fair view of what's happening in the market. Now, I'm glad you said that, because the issue, the topic of today's discussion is professionalism under pressure. Why the insurance industry is being tested and what industry professionals must fix. I think that's key.
Yeah.
Now, I'd like to tap into some of your experiences, not just locally in Zimbabwe, but of course in Africa and across the region, and to really understand this issue of trust,
Yes.
because that's one of the biggest issues. Now, before we move to that, I want to talk about insurance is fundamentally a business of trust. I mean, that's what it's all about. Yet many policymakers across Zimbabwe and Africa only discover the true meaning of their cover at the claim stage. I think we've heard this a lot from policyholders. Has the industry normalized ambiguity in policy wording at the expense of transparency? In other words, is it easier for industry to make the policy so complicated that the policyholders don't understand them or not?
Well, the honest and uncomfortable answer really to that question is, to an extent, yes. We have allowed it to happen for too long. There are reforms that are happening, however. As you know, insurance is, a social contract, one which is most intimate, financial promise from institutions that they'll actually be there when the world falls apart for the client. But what we have witnessed, though, is that sometimes, not only in Zimbabwe, but across Africa, in some pockets in global markets, you find that there's that systematic erosion in terms of that promise through deliberate negligence or negligent complexity, perhaps in policy.
So you're finding this
documentation.
complexity is standard. I mean, it's not unusual in Zimbabwe. It seems to be pretty much across the insurance sector in Africa. Do you think?
It is actually prevalent, but I think this is where the genuine insurance companies differentiate themselves now, and they get time to look at the product and the client with a governance lens, where you actually advise the client what cover they are getting, and they get no surprises when they are coming to claim. In many instances, clients get to know the amount of coverage they had bought at the time they are claiming.
Or even what type of claim they're supposed to be able to give, and that's unacceptable. But look, right. I mean, but let's agree that we do have what I can call regulators that look after the insurance sector. Of course, in Zimbabwe, it's the Insurance Pensions Commission, IPEC, and they do issue short-term insurance sector reports, because let's talk about short-term, because obviously we got long-term, which looks at life in particular, and short-term, which is pretty good in Zimbabwe. It seems to be growing. Talk to me a little bit about that IPEC report and what it actually says.
India, I want to refer to the recent report from IPEC, which is the short-term report 2025 for the year ended 31 December. If you look at the markets, it reveals that the sector has considerably grown and at scale, and it is a genuine market that contributes significantly to the GDP.
It's a short term.
Yes, on the short term, yeah. But there is the governance issues that surround the states. If you look at the growth of the sector, it accounted 77% in a single year, processing about 895,140 new policies. And at the same time, 531,749 policies exist in the same period. When you look at the growth, you are looking at the number of policies that have come through vis-a-vis the quality of the policyholder understanding of the point at the point of sale, which deserves a serious scrutiny to say when policies are being issued at that velocity of 77%, the risk of inadequacies in terms of disclosure and insufficient, when you look at the exclusions as explained, and misunderstanding of the cover is not only theoretical, it's structural. So there's a lot of work that we need to do as insurers, given the states that I've just given you, that the market actually grew by 77%.
Yeah. Now, I also noticed that microinsurance seems to have taken quite a reasonable percentage of insurance cover in the market. Talk to me about that, because is that a reason for concern? Is it a reason for celebration? I mean, does that muddy the pit, so to speak?
And the micro sector of the economy is one that I think, as far as Africa is concerned, we can actually lead in terms of products that are coming, whether it's the financial insurance or etc. But when you look at the report that I'm talking about, and I want to refer to the short-term report, where we note that there was a 20% loss claims ratio from that sector. And one then observes to say, in the context of this discussion, in a market where micro-insurance products are specifically designed for the lower income people, these are the vulnerable policyholders. These are people often do not have capacity really to absorb uninsured losses and least access to legal resources when they dispute to claims. And you see a loss ratio of 20%, one might actually think that the loss ratio is very good. But when you really look at it critically, you find that perhaps there's a lot of suppression in terms of paying out those claims in that sector. To then say, why are we having such a good loss ratio when this sector is the most active and traffic in terms of
I
claims?
suppose as a citizen, my question would be, what are the benefits of not paying claims? Are there benefits to the insurer of not paying a claim that comes in? Is it like they save money, or I don't understand the rationale of trying to deny claims, which seems to be sometimes you're creeping into the market.
Now, Andy, to be honest, there's no benefit. We are in business in the insurance market to save clients so that we can also get some profits to the business, to be able to run the business. But there has to be a balance between profitability and also claim settlement. We insure clients in order for them to claim when there's a disaster or something, a mishap happens.
Okay. All right.
Now, if you're going to suppress that ability for them to claim through technicalities and so on, then it becomes a problem. And that's why trust then is lost.
Yeah. Now, obviously, it's very important for a client of any insurance company or microinsurance firm to know that come due date, their claim will be paid.
Yes.
I think that's the key. Now, that ties in a lot to what in Zimbabwe, what financial markets would call capital adequacy or capital requirements, minimal capital requirements.
Yeah.
And the numbers that I'm reading from the IPEC report don't give me confidence. I mean, they're saying that of IPEC, 15 out of 21 direct insurers met the minimum capital requirement, meaning 6 insurers didn't.
Yeah.
Now, that's a bit of a worry, because does that imply that those 6 insurers who haven't got minimal capital requirements should be concerned, or clients should be concerned about them? I mean, talk to me about this minimum capital requirement, how important it is in the insurance sector.
Andy, I must give credit to our regulator. We have come this far in terms of reforms, and I'm sure they've done quite well. I've been in other markets and so on, regulated, and the reforms that IPEC is doing at the moment is very good. We've seen some sanity in terms of doing business, governance issues of ethics and so on. And when you look at the activities of the Commission, really, as outlined in the report, it reflects that there is a commitment to strengthening the market conduct. And in this instance, the continuous implementation of the treating customer fairly framework, as well as reference to the Zimbabwe Integrating Capital and Risk Program, ZICAP. These are meaningful regulatory interventions that have come. And when you refer to the 6 that did not meet the capital, yes, indeed, then it becomes a problem. They have problems in terms of meeting claims because they haven't gotten the capacity in terms of undercapitalization. And, then you give it to the insurance market, 15 out of 21, only 6.
It's not bad, I suppose.
I think we are doing well.
But it also implies that IPEC is keeping an eye on them.
Oh,
because obviously
certainly. They are being
the regulator
monitored.
would be trying to push them to
No. IPEC is monitoring them, and in terms of, in fact, we have seen stringent measures being put on those people, on those companies, and to the extent that some of the licenses are actually at stake. And now and again, you have inspections coming from IPEC, prompt inspections, sometimes actions being taken, and I think a lot of being done in that regard. So again, I must stress that IPEC are there to protect the policyholders' interest.
Yeah.
And all these things they are doing to get capitalization right, to get the risk-based capitalization in place, it's all to safeguard the policyholders' funds.
Which builds into trust.
Exactly.
Which is exactly where we are. Now, one thing that you may not know out there as insurance policy holders, you can actually complain. You can complain if you find anything wrong with your policy, you find there's any underhand issues being done by insurance agents, that you can do. But we're going to talk about that after the break. When we look at the IPEC report and understand, is there transparency between the complaints made by policyholders and the actual resolutions? I'm Andy Hodges. This is Insurance Explained. Welcome back to Insurance Explained. I'm your host, Andy Hodges. I'm here joined by Dr. Ladmo Gomera. He's the CEO of CGI Zimbabwe. Ladmo, we were talking about the recent IPEC short-term insurance report 2025. And one issue I wanted to look at is the issue of complaints. There is a section 1 in that report that looks at the complaints, about documents, the nature of the complaints, the volume, the resolutions made with the policy holders. All of that is there, but it seems to imply, looking at that report from a cursory perspective, that there is a transparency gap. Is that a true statement for me to make?
To a certain extent, Andy, it is. There is a transparency gap, but I think this is the work that the industry is doing through IPEC and also the Insurance Council of Zimbabwe. The idea of complaints was mooted for the simple reason that the regulator is interested in finding out how the customers are being treated in the market.
Makes sense.
And when you look at the nature of the complaints, I think most of them are coming from delayed settlements and some from exclusions that would have been put, and some, of course, it's as a result of policy wordings which are wrongly put. And but just looking at the states, you find that the complaints are actually getting down through the intervention of the regulator, and being resolutions are being found.
Okay.
And I think players in the market are now aware and very alert to the fact that these complaints are coming through the regulator, and you should do something.
What I like about what you're saying is that it's very clear that the insurance companies or the insurers, they're on notice, so to put, by IPEC. In other words, perform well, sell the right policies with the right language, create trust amongst your policyholders, and you can operate in the insurance market. I just want to give you a few numbers just for you to understand. Let's look at the UK. The UK Financial Conduct Authority found in its pre-consumer duty implementation reviews that 60%, you hear that number, 60% of insurance policy documents reviewed contained language that could mislead a reasonable consumer. So those are very important. Lama, I want to touch on something else which I think is important. We want to look at the African context, but I think this is something that's inherent throughout the whole of Africa, and that's about the systems response. I think that's something which is important. Maybe explain what I'm meaning by that, because I think I don't want to throw too much jargon out there, but I think we have to put some of it. But there is an issue about that in terms of strengthening market conduct, how the system is responding to the new insurance practices and the new IPEC recommendations. Maybe talk to me about that.
I think one of the key issues in the market is about trust. The trust deficit, really not entirely the result of insurers themselves' behavior or conduct, but also economically. You are aware that we went through a very tough period.
I think that's something I'd like to emphasize. I'm sorry to jump in there, but it's something that I've always been saying, in that it appears that Zimbabweans, when they lack trust in the insurance sector, go back to 2008, I think, is the major issue, where most Zimbabweans, particularly on the life side, lost a lot of their money, and a lot of their policies were basically written off to zero. That trust deficit is there. There's no doubt about it. But it also must be said that one of the major reasons, or the major reason, that the policies went to zero or pretty much worthless was due to the economic situation in 2008, where the Zimbabwe dollar crashed, the currency went to spin, the hyperinflation. Yes. In fact, I always say that if you were a lender in that time, if you had a loan for a house, you got away with a free house. But if you had money in a bank, you lost all your money. I think so. That's a very important thing.
In the same vein, and people lost value to their policies. They'd insured over decades life insurance policies, endowment policies.
I'm one of them.
And some of them had educational policies for their kids, and so on. And all that went, including the pensioners.
So you can imagine the level of distrust, of mistrust. So I think it's important that we talk about
I thought we'd put it in context that It's not all because of insurance
Agreed.
behavior and conduct.
Yeah.
But having said that, there is also the issue of leadership, the issue of the systems themselves, the models of the system they use, and of course the issues to do with governance.
Okay,
Let me
that's so
speak
important.
Yeah, let me speak to the issues to do with governance. So the insurance market has got a lot of technocrats, people that are well versed in the products. They are professionals that are around, trained in different institutions. As you know, it's a complex market. You need to understand. We have done very well when it comes to experts in insurance and so on. But where I think there's a gap is on the leadership gap, where in terms of governance, we are found wanting, perhaps because some of the players in the market are owner-owned businesses. And these things we talk about, accountability, transparency, and so on, has to be forced upon some of the shareholders. But in terms of the other companies that are in the market, it's also important that you take notice of how they've transformed their businesses to become the best in terms of governance. Now, when I talk governance, I'm talking about the board itself in terms of composition. They are the people that set the tone, they do the oversight of the governance. If a board insists on remuneration based on reduction in claims, for instance, and
that's when you deny, don't you? You deny claims
instead of having matrices to please or to bring about strategic outcomes that impact on the client, then the boards are failing in their duties. But in the markets so far, there's a lot that IPEC is doing in terms of governance with the leadership in the market. Certain training programs are being done, but I think beyond that, there's the issue of integrity beyond compliance. And we are saying as insurance executives, it's time now they go beyond just complying, but go beyond, look at the culture of integrity in terms of how they do business ethically and so on. And also, let's be clear. If a claim has to be paid, it has to be paid.
It must be paid, and you don't need to go through hoops or to have to come to my office and we discuss it. I mean, this is what happens in real life.
But then again, the model in certain instances is based on sales. So you bring a lot of sales and so on. You are the best in class.
But I do put it to you.
Let me just finish. So when you bring the sales and you're a high performer, you tend to be rewarded.
Yes.
But I think we need to go beyond just looking at the sales.
It's quality.
We need to look at the quality. We need to look at the impact it has on the client. We need to look at how those sales have come about.
Right.
Are they not disadvantaging the client? And is the client getting the promise? And is it prompt and at the right amount?
I do want to put this to you though, and it's something I have heard very often from inside and outside the insurance sector. And this is around your matrix of products. The discussion, the argument is that the insurance sector is not selling the right products to the right customer. We're buying products that you come to sell us. We're not buying products that we want. Well, what do you say to that?
Well, traditionally, that was what was happening. But I think of recent, all the companies have now changed their model in terms of finding the needs of the client first, and bringing about products that are commensurate with those needs. And in any case, because of the evolving landscape in the market and in the economy, you find that there's a lot of innovation around product that can suit a certain category of clients. And in this instance, I'm talking about the SMEs, for instance, the micro products that are coming now. Thank God there's technology which enables the products to be distributed across.
These are smaller policies, but larger audience.
It's highly intensive and expensive to distribute, but when you do have products that are broken down and can suit the lower end of the populace, and they find value out of that, it also helps to build up in terms of value to the economy.
I will ask you later on about some of the changes that you believe specifically need to be made, particularly whether it be short-term or long-term. But I wanted to move on a little bit to talk about, again, to just get back on the trust deficit, because it is, I think, one of the major issues that faces the Zimbabwe insurance sector. We're talking here delayed claims, disputed exclusions, public skepticism. I mean, these are facts of life. The issue I have is that there doesn't appear to be any kind of code of conduct, code of ethics, something that we as consumers can look and say, you know what, when an insurance agent comes and sells me a product, they have very strong rules they must follow. They can't sell me bad products. They can't lie to me. They can't do this. They can't do that. Does that exist in the insurance sector? If it doesn't exist, why not? And what are your views on whether it should or shouldn't?
It exists, Andy, but to the extent that we need an industry-wide code of conduct that then takes into account the work that the professionals are doing in the market and making sure that they're held accountable when things go wrong, which speaks to the ethics code of conduct within their professional institutes. Like, for instance, IIZ could be working on making sure that the professionals in the market attend CPDs, continuous professional development, and also abide by the code of ethics that we have in other markets in Europe and Asia. You have an industry-wide code of conduct where if things go wrong and somebody misbehaves, whether regionally in South Africa, in Mozambique, and so on, they could be tracked. In fact, they've got a central database that can actually hold those guys accountable. But we find that in our markets, and I'm not really picking at Zimbabwe only, but in Africa and developing countries in particular, you find that if somebody is involved in issues of misappropriation or mistreating customers and so on, they can be held accountable at that stage. And unfortunately, the other regions where those guys find space after that, they would not know that this is what happened. So I would encourage and really advocate for an industry-wide code of conduct that has got that speaks to other markets, to the extent that if you do certain things, you get blacklisted and you don't come back. Just like the lawyers do, they are deregistered. Yeah. The accountants, they're deregistered through the regulators. And that is work that IPEC, the Insurance Institute of Zimbabwe, and CZ can actually look at.
I mean, if you look at the numbers, 35.2 of complaints relate to delayed settlement. A portion of that delay is attributable to individual practitioners, claims assessors, claims managers, intermediaries. So it's very clear that there is a professionalism gap in our market.
Yes, I think it borders much on the culture that permeates the markets. If assessors, claims processors, and underwriters and so on, their remuneration is based on serving and having profitability for the company at the expense of the consumer, then you have that professional gap that is there too. We are not doing the right things as professionals.
Which is why I suppose the Insurance Institute of Zimbabwe comes in. They're talking about training, making sure that
like I said, we've really done well. Even the work that IIZ is doing. Right now, the campaigns, you know, through and in partnership with IPEC, you know, all the information. That's what we need. Dissemination to the consumers and making sure that the consumer is treated fairly and claims are paid on time. The exclusion that you talk about are fully explained. In fact, for me, the language of the police or police wordings should actually be changing. If it's complex, let's have a pager at the back that explains exactly what we are covering. Simplify.
Simply, because this is what I think consumers are asking about. You know, can I sign a contract which I understand? I mean, it's as basic as that.
But having said that, Andy, no doubt, Zimbabwe is right at the top in terms of getting these things right. I've worked in different markets where yeah, it's really
Look, there's a lot we can talk about, of course. Now, I know I'm going to get you back on the show because obviously there's just not enough time for us to cover everything. I want to look at the leadership problem, the leadership issue, the systems issue around that. But I think to get down to the crux of it, really, just to pick your brains, my direct question to you: what must be done?
Yeah, indeed. There's a lot that has to be done.
You only got a few minutes, unfortunately, but let us know. What are your thoughts?
I think the first thing is let's support the initiatives that the regulator is doing for the market to bring sanity to the markets. Let's also support the players that are doing the right things, the bigger players. Let's not punish them and for doing good things, because sometimes those that are not complying usually walks away with murder. And also, let's now professionalize the way we do business. Our professionals in the market should be taken through refresher courses, should also be part and parcel of a professional body that has got a code of conduct, code of ethics. They abide to that. If there is something that they do that's amiss, they are held accountable at their institutes. For instance, I look after the Governance Institute. My members, if there's someone who does anything in the market and they are found wanting, we actually put them under disciplinary.
So governance needs to be strengthened as well. I think that's critical, because
There's
this
no
is
way
what you...
It starts and ends with governance. And we are saying perhaps a lot of our executive in the market should be looking at really getting to know more about corporate governance, getting to sit on boards, directing these businesses to do ethical things, the ethical business, the ethical way, but also to cross-pollinate with other international and regional companies.
Do you think that in the current environment, consumers who want to buy insurance policies should start believing that there is some form of trust in the sector, and they're not going to go through the 2008 where in 5 years, 10 years time, they lose all their money?
I think where we're sitting, and I can comfortably say consumers get to benefit if they insure now, because all we've learned our lessons, both from the insurance side and from the consumers themselves. Adequate cover is important. If you lose your assets, you need to be brought back to the status that you were in, and that's paramount. For businesses, I can't even overemphasize the fact that you need insurance to make sure your risks are covered. But above all, it's also good to because it aids to the economic development and economic recovery. The bulletins the national bulletins that we are talking about, 2030 and so on, needs insurance playing a major role in
and one thing that people don't understand is insurance is a form of savings.
Yes.
Dr. Lamogomera,
excellent.
CEO CGI, thank you, sir. It's been a pleasure as usual.
Thank you, Andy, and thanks for having me.
Well, there you have it. This is Insurance Explained, the podcast that explains insurance to you simply and easily. I'm Andy Hodges. Join us next time. Goodbye, and please, you all be safe.
Thank you.